Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. Let's have a look at what actually happened with the markets today. Before I do start, guys, make sure you grab that $7 trading course with the link in the description below. If you have to if you're struggling with the trading right now, that breakthrough trading course, $7 with a link in the description will help you out. So go get that right now, guys, because I'm not sure when I'm going to end it, but when I do finish the sale, it's going to go back up to $500. So grab that $7 trading course link in the description there. So let's have a look at what's actually happened with the markets today. So firstly, off the rank, which is the Dow Jones. Dow Jones has, we actually had a little bit of a pullback yesterday. And one thing that I was saying in the last couple of updates is that, one, I'm expecting some form of a pullback because we have had a big move. How the markets operate and they float, how the markets work is they flow, right? So your anticipation of what's coming can help you stay calm. And what I mean by that is that when the markets, they flow like this, right? They stair-step in a stair-stepping fashion. They do stuff like this. See how it stair-steps, right? So we could be stair-stepping here and then doing something like that. So by understanding that, we can stay calm and just anticipate, okay, this is what's likely to happen, right? So if you're in the Dow Jones, which I am, S&P 500 and stuff like that, then you can anticipate it, right? You can anticipate what's going on through there. So we can see firstly that we had a bit of a down day, yesterday, and then today was pretty much a nothing day. So it looks like we're holding here just a little bit today. If we go a bit deeper and say, let's actually go to the 4-hour chart let's go to the 4-hour chart. Where are you? 4-hour? It's probably right in front of my face and I can't see it. It's right there. Okay, so the 4-hour chart is not really doing much. Let's go to the hourly charts. So what's happened here with the hourly charts is that we've had a very nice move up, as you can see. Bit of a gap up. That was an exhaustion gap. Now, different gaps happen at different times. And let me share this with you here. Generally what happens is if the market is moving in a direction for a while, like we see here, and then we get a bit of a gap, that is very high probability that is going to be what's called an exhaustion gap. An exhaustion gap is because the market, it's like, all right, I won't go there. Right? It's an exhaustion gap. It's like you're going, and you got that last little energy. It's like if you're doing some weights, right? Or you're doing a workout and you're going. I'll give you an example. Yesterday, I was at my F45 class, and one of the stations was bike, right? It was a bike for 2 minutes. 1 minute on, I think it's about 20 seconds off, and then another minute on. But we went through the whole 2-minute set with no rest, right? And we had a 50 calorie target. Now put it this way, guys. Most people in the gym are hitting 30 calories. But because of my fitness and so on and so forth, the coach gave me a 50 target calorie, which was hard as hell, right? So most people hitting 30, it's like, okay, I'll give you 50. Now, by the way, I hit the 50, I got the 51. And then my instructor, my coach came over to me. He goes, man, I was only joking, you know that. He didn't actually expect me to get 50. He was only joking because most people are only getting that 30 to 35 range on the bike. But I got 50. And so anyway, so the whole purpose of that is that as I was going towards this 50 target, I didn't know he was joking. He just said, "Hey, John, I want you to do 50 on the bike." And again, I did. It was because he came over. He was like, "Oh my goodness, you did it! I didn't expect you to get it." So anyway, so the 50 calories, right? This is 50 calories on the bike. The purpose of me saying this is that I was going, and as I said, it was 1 minute on and then 20 seconds off. But you don't do with the bike, you don't do the 20 seconds off. You just keep going, and then you got another 1 minute, and then you change stations, right? That's what the F45 style of training is. I love it. It's very functional. It's different stations, different workouts. It's amazing. I love it. So the purpose here is that I did this 1 minute, boom, done, and I was at a certain amount of calories. I did the 20 seconds, boom, done, and I kept going. And then I was about 30 seconds in, and I only had about maybe 35 to 40 calories. And I'm thinking, actually, no, that's not true. I was about 40 about 40 seconds in, and I had about 20 seconds left, and I had only about 40 calories. And I'm thinking, oh crap, I've got 20 seconds left to get 10 calories really, really quickly. Otherwise, I'm not going to hit my target. So then what I did is I just went, and I went balls to the wall, and I gave this one last little burst of energy to get the targets. And then guess what happened? I hopped off, and then I had a rest for a minute. Like the next station, I just sat there. I didn't actually do the first minute for the next workout. I sat there, and then I did the last minute for that workout. The reason why is because I gave it everything I got with that workout. Right? I was like, I kept going, and then I gave it everything I got. Breathing heavy, just fitness to the level, boom, 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 boom. And then guess what? Then I actually had to have a break, right? And that's exactly how the markets work with that. And so you'll notice this happens a lot. Even on the S&P 500, this is exactly what happened as well too. I think it was more like the Nasdaq. Look at the Nasdaq actually had a bit of a gap there as well too. So by looking at that there, traders, and again, this is how the markets operate. But when you're trading, make sure you have a really good trading system. If you go to Johns, JOHNS, that's johnsfreetraining.com, johnsfreetraining.com, that's johnsfreetraining.com. I'm going to give you access to a webinar, and that webinar, I'm going to give you my trading system for free. I'm going to show you exactly all the details to my #1 trading pattern that I use, and what the scanner I use to scan the markets to find these trades. And the #1 thing that took me from losing money to making money, you'll be able to get all that on that webinar. So you can see that through there. But if we go to the S&P 500, same sort of thing, right? As the market was rising through this week, I started doing videos saying, you know what, guys, we're getting overextended here. We've been going up. I'm expecting some form of a pullback, not a correct. I know a lot of people thinking that this is just a sucker rally and the market's going to go down, the market's going to crash, and that's it. It's all over. Maybe, right? Because that's the beauty of the business, right? Beauty of the business is that anything can happen. Maybe. So when we're looking at this here, as you can see, right, that yes, we did start to get a bit of a pullback. And I know a lot of people thinking, here we go, right? Here we go. And I know you're looking at your indicators, and the stochastics are probably going to be oversold through here. We're going to get oversold indicators, and that's it. The rally's done, the sucker rally's done, and so on and so forth, right? And then now we're getting a pullback. So we're getting a pullback. But the important thing to remember with this pullback is this, all right? What is an upward trend consist of higher highs and higher lows? This was a low. This was a double bottom. This has now made a higher high. If indeed the market does come back down, maybe here, or maybe if it just does this, and then we start to run back up again, guess what that is? That's now a higher low, and now we're in an upward trend. Traders, if that happens, do not be fighting this market. I mean, do not be trying to short this market. If this market confirms this upward trend, because right now it's just given a hint that we could be in an upward trend, we need to see the higher low first, right? So if we do get a bit more of a downside, maybe moving into next week, or maybe we get something like this, right? And then we start to get something like this, then we start to get something like that. That's going to be a higher low. And especially if we break past these previous highs. If that happens, traders, and you think, okay, this is just a sucker rally, this is going to suck everyone else in, and so on and so forth. You are fighting the market, and you are putting your ego in the market. It's so important to not put your ego in the market. It doesn't matter what you think or what your bias is or what's happening around the world. If the market is saying, okay, we're now resuming this upward trend by creating this, if it does do that, then anyone who's short is going to get completely run over. So if that happens next week, I'm not saying it's going to, but if that happens, then don't be short this market. Same for the good old Nasdaq as well too. Nasdaq has done the same sort of thing, right? We had this high, it's now made this high through here. We're getting a bit of a pullback. If we do get more of a pullback, and then we start to get some sort of a, maybe like something like that, and then we start to get a move up, and we create this higher low, break it past previous highs. Guess what? We're now in an upward trend. The buyers are in control. When someone says a buyers are in control, that means if the market goes up through here and then the pulls back, the buyers are still in control. Why? Because it's an upward trend. The market goes up, pull back, upward trend, upward trend, upward trend. Make sense? So that's what we're looking at through there with the whole market through here. And make sure, guys, that one, anticipation is key. That if the market is moving in a direction for a long time, right? Just like even back here, you'll notice back that this move back here, that you're going to expect some form of a pullback, right? So same for here, we're getting we're getting that pullback in the markets, but I believe this pullback is going to be short-lived. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to johnsfreetraining.com, or there should be a link in the description, click on that. Go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.